Hey, welcome to Mullen Stock. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. And also remember that this is not a financial advice video. Today was a perilous day for Mullen. I want to share some data points and talk about shorts. Recently, we got answers to some questions due to a document submitted today. So I'd like to discuss a few of them. Now, let's get into it. Mullen stock went down by 22.29%. But the trading volume was significantly high, with 67.3 million shares exchanged, while the usual daily trade is around 25 million shares. Several factors influenced the market today, especially in the EV market. Tesla also announced its quarterly earnings, and Mullen submitted its preliminary 14A. As a result, Mullen was affected from both sides. Mullen also touched a new 52-week low, which was around $22.04. There wasn't any significant news today. It was just that one document. I've already mentioned some details about it, such as its date, which was December 15, 2023. In case you're not aware, a preliminary 14 signifies a shareholder meeting. But the document also mentions that if you want to vote on this or the two proposed items, you should be a shareholder as of October 30, 2023. There are two proposed items in this document. The first item is about a reverse stock split, ranging from 1 to 2 to 1 to 100. The second item is that if there aren't enough votes for the first item, the meeting can be adjourned. Some see this document as a positive sign because it's being done for compliance with NASDAQ. However, others view it negatively because a reverse stock split has been done twice before. Another important point from this document, which I didn't discuss earlier, is that based on the last earnings report, there were about 184.1 million outstanding shares. However, Mullen had repurchased some shares since then, so we didn't know what was happening. This document reveals that there are now approximately 287 million outstanding shares. This suggests that they've diluted their shares since the last earnings report. So the question is, the dilution over? The answer is no, because based on the previous earnings report, there are approximately 155 million unexercised warrants connected to preferred debt class shares. By converting these warrants, they can create a total of 155 million shares. Therefore, if you subtract 155 million from 184 million, and they have repurchased some shares, approximately 333,000 shares are still under dilution. Why are warrants that are going to convert at a 110% rate, when combined altogether, expected to result in approximately 330 million outstanding shares? According to the preliminary 14, which mentions 287, meaning no dilution has occurred so far, some are saying the warrants are now complete, but it's not necessary to assume that. Remember that this company does not have preferred or D-class shares, so that's a positive aspect. Another point is that voting agreements have been terminated, and Mr. Misery no longer holds proxies, so when the second reverse stock split happened, it was revealed that TD and Schwab numbers were being manipulated. Hopefully, for this shareholder meeting, scheduled for December 15, we will have a large entity to conduct the vote, so that it's done correctly and there's no funny business from major institutions. Manipulation occurred in the previous meeting, and David had proxies for major insiders, but it seems he doesn't have proxies now. This means that retail investors may have significant voting power for this meeting, which is crucial. Speculations are difficult to make regarding the float and other factors, but it seems that at least some retail investors have a stake in this company. There have been reports suggesting that the float is approximately 85 to 90% according to different brokers, but this is a common opinion. So if this is true, the vote for proposal number 1 could go through. So that attribute leans in that direction. Furthermore, I believe that through this preliminary 14A, more information will be available, but I just want to express that the meaning of dilution is still ongoing, and this gives a somewhat negative impression. And when it comes to David no longer holding proxies, I think it's a win-lose scenario. Speaking of some data points, there are about 110 inputs against purchasing $119,000 worth of calls, which has been relatively evenly divided over the past few days. Calls outnumber puts significantly. Today, optimism is clearly lower. And regarding open interest, currently there are 15,000 at the 50-cent strike price and 13 at the 1. All of this will be in vain if some good news doesn't come to push it higher. But at this stage, I can say that this is somewhat beyond a realistic option because to reach the 50-cent strike price, a 100% run is needed, which, in my opinion, is outside the realm of possibility. When it comes to what the shorts have done, I would like to give you an overview. The short score is 7.5. Utilization is 87.44. Shorts have increased by 1.23 million shares today. They have shorted 21% of the free float in the market. In total, 36.57 million shares have been shorted. The cost to borrow is averaging around 14.25% through Interactive Brokers. Short availability indicates that there are no shares available to be shorted now. As I mentioned a couple of days ago, shorts have returned some shares to be shorted again. But as I mentioned yesterday, this is all happening. However, RBC recently purchased, mostly for lending purposes, as I indicated a couple of days ago, possibly once again. You can understand that we have no definite knowledge of RBC and other institutions' intentions in Mullen case. If you bought or sold something today, give yourself a shout out. What are your thoughts on this? Once again, I just wanted to make it clear that retail investors are quite divided in this preliminary 14 and the entire voting case. As I mentioned, some people see it as absolutely negative and foresee future events. Some people are optimistic about it because it's essentially for NASDAQ compliance, and Mullen doesn't intend to use it. This is why there's a division among retail investors. To get direct clarity from David, it would be good to say only this: hey, we did this for NASDAQ. If we can't reach above $1 by a certain date, we won't do a reverse stock split. We will just delist, because in my opinion, a third reverse stock split will completely eliminate the chances of getting funding back for any previous long-term holders. But this is only my interpretation. I'd like to hear your thoughts on this. Guys, that's all we have for you today. What is your opinion about Mullen stock? Get involved and let us know in the comments down below. Thank you for watching.